Larry, what's up, man?
Not much, Dante. Nice to see you again. Last time I saw you, we were doing a CrossFit WOD in California. It was great.
I know,
We
I
were
know.
pushing some serious weight.
Yeah, you gotta stay fit. You gotta,
You do.
uh, like literally, there's I'm here in North Carolina, and I just, I think I really appreciate you and just the grind that you go after every single day, trying to, stay fit and
Well, yeah, I'm just trying to, I do it because I want to be around to watch fiat fail.
oh
I-
yeah,
As everybody knows, I have no love lost for the central bankers of the world. And, I want to see Ben Bernanke in the history books, right next to John Law and all the other great money printers in history.
oh sure. I just mentioned John Law in my last episode, man. That's going back into the Mississippi and New Orleans, and
Yeah.
man, so give us a little bit because I know this story because I've just listened to you and followed you a ton. But go
Yeah.
back to 2008. I mean, just some of the disdain that you have for the fiat system,
Yeah.
some of the trades that you had on that,
Yeah.
when it was time to call it the chips, it was like, oh,
Yeah,
we're
we're
not.
changing the rules. Yeah, I'm writing a book on this topic. I mean, look, I mean, the central bankers have set up a system where the rich and powerful win and the rest of us lose, kind of consistently across the board, and that's been going on for 100 plus years. But it's gotten particularly worse as time has gone by, and as we approach what one of my friends calls the end of the great Keynesian experiment. And as we know, in '08, the GFC happened, and I was managing. I think what you're referring to is I was managing an investment partnership. And I could see the housing bubble just like Michael Burry. I didn't even know what a CDS was, so I wasn't smart enough to do that trade. But I was short all the housing stocks and AMBAC and AIC or the insurance companies, etc. So anyway, and I was short those companies because I knew the bubble was going to burst. And on September, I think it was 19th of 2028, they outlawed the short sale of stocks. And so I was having a great year. I was up about 50% that year. And when they did that, as you might imagine, all those stocks caught a huge bid and raced higher, 20, 30%. And so I gave up most of that gain, if not all of it in some cases. And I ended up the year, I wasn't able to be short those stocks as they all fell to much lower levels, some cases zero, like Lehman. And so, basically, they changed the rules on me, which, that kind of, that started radicalizing me for sound money. I was kind of like, well, this is screwed up. These guys are changing the rules in the middle of the game. But then two other things really completely radicalized me, and that was the institution of zero interest rate policy by Bernanke. Taking rates to zero is just crazy, right? In a system where our money is supposed to represent value and value is supposed to be able to earn a return, savings and investment should match. They decided, we're going to pay money zero value, which almost as a tautology is okay, money is worthless, which in fiat really kind of is.
Crazy.
And then not after they did ZERP very quickly. And well, they did some QE during '08, but then they did more of it, as you know, in the next few years. And QE is nothing more than printing money. I mean, it's buying assets and putting them on the Fed balance sheet with money that they create with a mouse click. So at that point in time, I had been an investment manager, looking at buying, growth at a reasonable price was kind of the theme of my fund. And I'd done technology most of my career and tried to find things that grew and were reasonably priced and could have multiple expansion. And at that point in my career, I just went, whoa, hang on a second. This is all different. We're going to have some serious inflation. This is monetary madness. I called it at the time monetary chaos. And I rethought my investment thesis. I thought, given these macro conditions, I've got to invest differently than I have. I've got to protect myself from this monetary debasement, which is certain to come and continue and get worse over time. And so I pivoted and got into the investing in gold and silver mining stocks. I was vaguely aware of Bitcoin. I missed it in the early days. I bought in 2013. I missed it early on because I saw all the prior experiments that had failed, like eCash and DigiCash. And, the thesis was great, money free of the state, outside of the banking system. I loved it, but it had never worked. And so I was very skeptical of Bitcoin. I thought, well, this isn't going to work either, just like those other ones. And what I didn't realize is the genius of Satoshi and what he'd actually created a system that did work. And so anyway, that left gold and silver as the two best asset alternatives to protect yourself against monetary debasement. And so I went and I got smart about gold and silver mining stocks because in the 70s, the last huge period of inflation that we had, those were the top performing stocks in that decade, followed closely by oil and gas stocks. Because in an inflationary environment, real assets appreciate substantially, as we all know. So that's kind of the background of how I got here. And yeah, it's been a hell of a ride because the silver and gold didn't work perfectly. I think they went up for a while, had a few good years, and they really took a hit, kind of an interim hit from 11 to 15, which was pretty brutal. And but I've stuck with it, and I could see, I watched along the way, and the book will detail all this, all the monetary steps they were taking. It just, things kept getting worse, and here we are. And some people say, well, this can go on for another 20 or 30 years. I don't think so. I think we're getting close to the end game.
Oh, for sure. Everyone keeps putting this 2030 year out there. Like I think it has a lot of validity, like a lot of kind of like the roaring 20s, and you kind of get to the end or the halt, near the late 20s. I feel like there's a lot of similarities. And I love your perspective because you not only have this hard money, hard commodity asset background and experience from some of those things that you have, but you also kind of have a VC technological revolution, like kind of big bet.
Well, that's the thing. Yeah, we
I
didn't talk about that. But prior to that, I was really lucky. In 1993, I was at a business meeting, and a guy gave me a business card and said, well, send that stuff to my internet address. And I was like, what's that? And he had a CompuServe internet address. It was a string of numbers and stuff. And he said, well, you have local area networks in your office, right? A Novell system, which most people listening to probably don't even know what Novell is. It was a big company at the time. I said, yeah, I got one of those. He said, imagine if you had Novell for the whole world. You could send an email to anyone, anywhere in the world. I was like, really? And he's like, yeah, that's what the internet is. So I went back to my office. I was managing a small venture capital fund. I went to my associates who were working. I said, we got to find out where this internet thing is, and we got to invest in it. and so, we just piled in big time and did very, very well for a bunch of years. We stayed a little too long, and we could see the bubble bursting in 2000. We couldn't sell everything. So at the tail end, we took some losses, but we did so well in the early stuff that we bought that, it was great. And this thing, I've said this in other podcasts. I mean, what's going on with Bitcoin and, digital money and network-based digital money reminds me so much of the development of the internet. And there was so much skepticism back then. I mean, it's the same thing. Paul Krugman says the fax machine. I mean, just a lot of people were like, this doesn't really matter. And I was like, no, this is going to matter a lot. and it did, right?
So one of the things that I remember hearing pretty like it hit me, it struck me was I read this book. There's this book about Home Depot and about the backstory of it and how Ross Perot, this is back in the day, Ross Perot, these guys who wanted to they wanted his investment at the time, and they wanted their company cars to be Chevys. And Ross Perot was like, no, like our guys are never going to ride around in Chevys. You guys need to be in Cadillacs. He never invested in Home Depot. Like his shares would be worth like $100 billion these days. He had just bought and held the stock, but he let the small things get in the way and just kind of disrupted this larger thesis, this thing that was going on. And I'll never forget that. And you told this story one time about, selling Microsoft to buy a condo.
Yeah.
Or everyone's like, oh, well, real estate with these interest rates drop and, the supply of real estate super low. I can actually touch that and those sorts of things. And I have these conversations all the time about people that are wanting to get out of real estate or get out of Bitcoin to get back into physical real estate. Like your condo story, like what did you?
Yeah. I mean, well, that was really just a case of needing housing and wanting to own a condo versus rent. But yeah, I mean, I had a nice profit in the Microsoft too. I mean, I was right about buying it. I bought it on the IPO and it went up. I remember 2 or 3 times from what I paid for it, and so I had a decent gain. And I could see it was an important company. It was going to last a long time. But I thought. I mean, at the time though, it wasn't as clear as it obviously is today, looking backwards. So I just sold it. And I don't think I necessarily made a mistake in selling it to buy housing, because housing is kind of a basic need. The mistake I think I made there more than anything else, I kicked myself for, is I probably could have sold 70 or 80% of it, kept the balance, and somehow figured out a place to get the other 20% that I needed for the condo.
Yeah.
And so and I think the thing that really changed in my lifetime and in my investment experience, and I don't think the world, and I talk about this in the book, I don't think the world has really cottoned on to how important this is the value creation that takes place in network businesses.
Yeah.
Pre the internet, there weren't really that many. I mean, there were somewhat of network businesses. I mean, kind of the yellow pages was a little bit of a network business, or the telephone companies were a little bit of a network businesses. But network businesses are businesses that grow in value as you get more users, and you attract more users because everyone wants to use the same network. And so it's Metcalfe's law: the value grows at the square of the underlying number of users. And I mean, if classical investment theory, Graham and Dodd value investing was, you look at cash flows and PEs and you try and buy things cheap and this, that, and the other. But Graham and Dodd never encountered, or it was very rare for them to encounter businesses that grew and became as bulletproof and valuable as the network businesses. I mean, if you look at kind of the Amazons of the world, which is up like 22,000 times since inception, or Microsoft is up a couple thousand times. I mean, or Google. I mean, the amount of money and the amount of value that's created in being in the leading network as an investor is just stunning. And another thing I talk about in the book, I mean, throughout the 2000s, I made some mistakes investment wise, because I would look at Amazon, I would look at Google, and I just couldn't get there. I had classic investment training, and I had, in Amazon's case, they were losing money. I'm like, I'm not going to buy a company that's losing money. There's no deep value there, right? Or, Google, the same thing. I was like, well, no, I never click on those ads. Why does anybody care about those ads? Well, the placement and fees and everything else, it turned out it was a really great business. And so, I'm not going to make that mistake again. Here we've got an emerging network of money that everybody in the world is going to need someday. And, we're really in the early days. And so it's like, okay, it's coming, you can just see it's coming. So you gotta grab a piece of this digital Manhattan, as Saylor refers to it,
Yeah. Yeah, don't overcomplicate it. Like the trends are moving so fast. It's like Bezos at the beginning of the everything store, where he's talking to the owner of D.E. Shaw, the hedge fund, and they created like email and Yahoo and stuff before that was even a thing. So
Right.
he kind of on the early stages of the internet, and he's like, "Hey, boss, I'm going to go leave to like sell books." He's like, "What are you talking about?" He's like, "Hey, man, like this internet thing, compounded annual growth is like 1,500%,
Yeah.
3 years in a row. Like this thing is going to be bigger than you know."
Right.
And so he was the top employee, smartest guy at D.E. Shaw,
Yeah.
and left, and everyone thought he was a madman.
Yeah. No, that's right. And everybody thought, who cares about selling books online? I mean, it's, it makes no sense. And of course, he branched out and everything else. To be completely fair, I mean, he's a quintillionaire in a sense, though, because he was really helped by the fact ZERP really helped him a lot,
Sure.
right? I mean, he was losing a ton of money,
Oh, yeah.
but in a zero interest rate environment, it didn't matter. Cost of capital was low. He could borrow cheaply, and people were willing to back him from an equity point of view. But that was a rough equity ride. I mean, I give Bill Miller a ton of credit. I mean, from the 08 or 09, I mean, I think there was a 90% drawdown in Amazon at one point. I mean, it was amazing. And obviously, just if you stuck with it, you did incredibly well. But it confirms, and even as recently as a few years ago, I've done some of the stats on this, and they're in the book as well. There've been, I think it was a 40%, 45% drawdown in Amazon sometime in the last 5 or 6 years. I mean, it's not uncommon, in these rapidly growing businesses, to have, over exuberance, and then, over, too much fear. And so, as people criticize Bitcoin, say it's too volatile, right? And well, that's the price you pay for, pioneering a new area, right? I mean, it goes too far, then it comes back. It goes too far, it comes back. But the trend is very clear, and to me, it's so unbelievable that TradFi hasn't really figured this out. I mean, some of them have. I mean, I give Larry Fink credit for pivoting. I don't particularly like the guy, but I think he figured, I better join him rather than fight him. And
He's a market maker. He's not stupid. He's the greatest market maker in the history of finance and Wall Street. Like
exactly,
mortgage-backed securities. How do we package these things
exactly,
and then products on top of it? Like this guy doing this.
He was smart enough to see that you can't fight the trend, and so he, rather than fight us, he joined us, which is, I mean, that's a net positive.
So you're in the Bitcoin Opportunity Fund, and I'd love to just hear your experience, because a lot of people, there's a right way and a wrong way to invest into gold miners, whether it be Barrick or some of these silver mines, or these things, right? That are, and it's interesting because I'd love to hear your experience on this, because it's fundamentally to be a gold miner, to be these people that like, I'm going to go out and find this new deposit, a plot of land. Like you have to be so far out on the risk curve.
Oh yeah, yeah.
So
It's gold mining is a terrible business, absolutely terrible business. But
and these guys aren't operators, right? They're risk takers. And
well, yeah, I mean, Yeah, it's like getting through. It's like threading a needle. I mean, there are world class geologists, and the patterns. I mean, there's a lot of pattern recognition in gold mining. I mean, and gold discovery. And we've got a lot more tools than we used to have. We can fly aeromag, we can fly, we can do lidar surveys. There's all kinds of things that they can do to say, hey, based on the way this geology looks, there ought to be gold here. And then they poke a hole and they find out, yep, we're right, there is, or no, we were wrong, there isn't. And but there's a lot of slip between the cup and the lip, and to get from there might be some gold here to gold coming out the door is a lot of time, a lot of money, and a lot of risk. Which is why in the gold mining space, what I tend to focus on more than, I mean, I've got some drill stories. There are three categories: the producers, developers, and drill stories. And the producers are the safest place to be because they have a mine that's operating, that's throwing out positive cash flow. So, they don't necessarily need to go sell stock to dilute you on a daily basis. The developers who have a deposit but haven't built the mine, or the drill stories who just think they have some good looking rocks that'll turn into a deposit, those guys, there's risk all over the place. I mean,
Yeah.
I mean, and many of them fail. And it's like, you've really got to pick them very, very carefully.
So how do you have, I mean, just in your, and just explain a little bit about the Bitcoin Opportunity Fund.
Yeah, sure.
Do you carry any of those learnings or thinking over to the
We really
Bitcoin?
do. We
Because
really do.
13 or so publicly traded companies, and there's some that are, the Maras, the riots that are,
Sure.
a lot of diluting of shares, but
Yeah.
they
First, let me say that I'm an advisor to that fund. That's not me day to day.
sure.
James Lavish and my partner David Foley are really the two guys, making the calls day to day. Greg Foss, myself, and Mark Moss are all advising them. And they've done a fabulous job of looking at public Bitcoin companies, Bitcoin related companies, and obviously they own, a MicroStrategy, which is a huge holding, and they own some of the miners. But with respect to the miners, they're extremely selective
Mhm.
because the Bitcoin mining business is a pretty tough business too.
Stuff.
It's commodity, it's cutthroat, it's based on having low cost, and we've got some very nice companies that are incredibly low cost. So in the portfolio, and then they've also done private companies that are working around the edges and doing working on a piece of the Bitcoin infrastructure and solution. So and I would say that that they're probably following the one thing I add is my view when I was in the venture capital business. Kind of my number one test of whether I wanted to invest in something. It just took away a lot of risk. Was is there revenue and are the dogs eating the food? Is what I like to say. And because there are a million people who come up and say, well, give me a bunch of money and I'll build this. I'll create this great food and the dogs will eat it. But frankly, between that dream and having dogs eating it is a long way with a lot of risk. When you've got a business that's actually working, it can be trivial in size. It can be very, very small. But if you've got a proven business model that's working, and the issue is really just to turn the crank, add money, then you've taken a lot of the risk out of that kind of investing. And so, and that's what these guys are doing. That's what David and James are doing. Not to say we haven't done a few raw startups, but in generally speaking, we're finding things that work and are likely to get much, much bigger as Bitcoin penetrates the world, which you and I both know it's in the process of doing. So they're doing a really good job, and they raised, it's a closed fund. They raised the first fund. They'll probably be out raising another one sometime in a year or so. But yeah, they're doing a great job.
Yeah. So one of the things that I think you're probably one of the best at, you have just tons of humility, but tons of world experience of dealing with the gold bugs and kind of that thing. And I feel like there's a lot in common of just the mindset that it takes to get into gold and the thesis
Yeah.
you would have in Bitcoin. But you were sort of able to make this leap that classically other people have. But that's
Yeah, there's the Peter Schiffs of the world, who's a good guy and a friend. And he's got it right. I mean, so look, before the Bitcoiners, the original hard money people were gold bugs. There was no other choice, right? And we were all Austrian economists. We've all read the books and know the story of fiat and understand the corruption in the system. And I understand it. I mean, some of the gold people are very frustrated that Bitcoin came along and stole some of their thunder, but they're not mutually exclusive, and there's a role for both. And I get angry at Bitcoiners when they shit on gold people. I get angry at gold people when they shit on Bitcoiners because we're all really fighting the same monster, which is the people who have, that create money without proof of work. They just, click a key on a computer keyboard and money appears. And and surprise, their friends benefit from it. What a
Yeah.
shocker, right? And so we've all got the same enemy, which is fiat, and and they each have a role. I mean, if you're 80 years old and you're trying to preserve your wealth and you want to be in something that's not fiat based, you want to have some form of cash or money that will not disappear through debasement, and you don't like volatility, then gold's a pretty decent choice for you versus Bitcoin. It certainly is going to underperform it massively, as it has, but it's not going to decrease in real purchasing power. It never has. And in the maximum drawdown, I think there was 1 year it drew down 30%, but most of the drawdowns are very modest. And as you and I both know, the Bitcoin world is a very volatile world. And the one mistake I see some Bitcoiners make is shoving people into it without telling them or explaining the volatility and preparing them for the volatility. Because as you and I also both know, the only mistake one can make in Bitcoin is you chase a rip,
Yeah.
and you buy it, and then it corrects, and you freak out and you sell it.
Yeah. Yeah.
That doesn't work.
Yeah. Yeah. I mean, the correlation between, I ran this data back to, I think it was 2013. If you've held for any 4-year period within that time
Yeah,
frame,
you're good. Yeah.
96.06%, right? Like chance of a
Yeah.
positive return any date you pick. So it's
Yeah.
just like, I mean, it's not a
You're good, but you got to. But 4 years is a long time for a lot of people. I mean, people can't think 4 minutes, 4 hours, 4 days, 4 months. I mean, it's you get on Twitter, you look at a lot of investors, they want instant gratification.
Yeah.
All the crypto bros, they all want instant gratification. That's just, and that's by the way, that's all a function of fiat. I mean, fiat. When you've got money that's debasing, when you've got a system that's fallen apart, this is why people play the lottery, because it feels like their life is hopeless, and they want to have some hope. Well, okay, I'll buy this ticket. Who knows? Maybe it'll hit. They'll give me a little bit. I mean, it's a stupid thing to do economically. It makes no sense, but they do it. And I think that it leads to the gambling culture in the stock market. It leads to the gambling culture with cryptocurrencies. I mean, there's a lot of evil or ill, bad behavior that occurs in a fiat-based system, and gets incentivized in a fiat-based system.
Yeah. I like, I mean, for sure. I mean, the Tim Ferriss 4-Hour Work Week. It's so funny how telling that is, and how he became the most popular podcaster in the world. And that just was like a trend, like a shift to, I can work 4 hours and live my best life. Like it's like, no, that's not really. It's been true for Tim.
Yeah.
At the leading edge of this technological revolution, right? It's like everybody chases their friend who invested in NVIDIA.
Yeah.
They look at their car and then don't realize that, right? They're up 30,000%.
Yeah.
And so then they chase, not realizing the volatility you have on the whipsaw.
That's exactly right. I mean, there's a lot to be learned from being in early in a major trend.
Well, that's one of the things I want to get to is just people say that they're late. Like they're like, oh, Bitcoin's already, it's the number, right? We don't have stocks.
Yeah.
We're 64K. Like how
Yeah.
can I in it now?
No, I encounter that all the time. I mean, they're like, well, yeah, but your basis is so much lower. I'm not going to put money in your pocket, blah, 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 blah. And I counter with kind of it's going up forever lower argument, which is, if you really consider, I mean, I usually come at that concern with a macro view. And I say, look, and this is, Jesse Croesus BTC on Twitter has done the best job of this, because he's got that beautiful chart or diagram, or schematic, I should say, where there's $900 billion of fiat assets, right? I mean, real estate, stocks, bonds, cash, you name it. And there's $1 trillion or $900 trillion of fiat assets. There's $1 trillion of market value in Bitcoin. There's about 12 trillion, maybe a little more now that gold's up in gold, but really only about half of that's for sale, because a lot of it is in jewelry and museums and so forth. And so call it 6 trillion. I mean, that 900 trillion is getting debased every year, everywhere, because money supply is growing. So as Preston says, there are more monetary units chasing the same goods and services. And so, as that 900 trillion starts to worry about their debasement, they're going to start to choose a form of money that can't be debased. And they really only have three choices, Bitcoin, gold, and silver.
Yeah.
And so all of which represent money. And so, that is going to, in my opinion, drive the price of all three of those assets to levels that people today can't even imagine. And And I get it because, they look backwards and, fiat has been relatively stable for a relatively long period of time. I mean, the U.S. hasn't had hyperinflation since its founding, and it had high inflation during the wars, and particularly the Civil War. But it's people kind of, they look backwards and think, well, I'm good. This is America. This is the dollar. It's going to be okay. And yet, if you look at the policies that we're following, if you look at the deficits that we're running, if you look at the way we're printing money to support those deficits, these are the kinds of things that, when they're done in other countries that don't have the world's reserve currency, they lead to inflation, sometimes to hyperinflation. And we're doing the exact same things. Now, other people say, well, we've got all the military, we've got all the guns, blah, blah, blah. Well, fine. But unless, we want to start a world war and force people into using our money, which I don't think we're going to do, people have the choice on what money to use. And everyone has a choice. Everyone wakes up every morning, they can decide, where am I going to put my savings? And we're going to leave them in the bank. We're going to buy a bond. We're going to buy a stock, whatever. Or we're going to buy gold, silver, or Bitcoin. And, look, some Americans are figuring it out. I get a kick out of the fact that Costco, every quarterly report I try and listen to their earnings report, and they talk about how many gold bars they're selling.
Oh, yeah.
So, people would say these average American Costco shoppers, I know I shop there, I love the place, they're buying gold, right? Why? Well, because they kind of know that it can't be debased, right?
Yeah.
And so, that trend, I think that trend is going to continue. So in my view, Bitcoin has no top and gold and silver have no top because fiat really has no bottom. I mean, if it sounds extreme, but I think it's possible. I'm not saying it's a likely case. I think it's a tail case. It used to be an extreme tail case. It's becoming less extreme, but there's a tail case that says that fiat currencies all fail. And under what time frame? Unclear. Certainly it could be many, many years. I tend to think it might be faster than that, but I don't want to try and panic people. But my point is that you don't even need fiat to fail for Bitcoin and gold to be very, very good investments on a comparative basis. I mean, since 2000, gold has outperformed the S&P, 500 by quite a bit, and everyone points to the S&P as being your best inflation hedge. It hasn't outperformed the Nasdaq. I mean, the technology stocks have done much better than gold, but there you've got risk. I mean, unless you're dealing with the monopolies. I mean, it's the digital monopolies really are kind of something to behold in terms of the quality of their cash flow stream and the defensibility of their positions. I mean, perhaps someday there'll be something other than Google, but right now, it seems to be they've got one of the most defensive moats I've ever seen in any business. Right?
It's crazy.
Yeah.
Toll Road. Like, I always want to give people this story. I went to William and Mary, which is the second oldest university to Harvard, 1693.
Yeah.
But when you look at the relative amount, where it's a public Ivy, they call it, but our endowment is only $2 billion, right? Relative to the Princetons, the Harvards, the Yales, the Columbia, the Cal Berkeleys. And it's because they invested 100% of their treasury, thank you, TJ, Thomas Jefferson, into Confederate war bonds.
Oh, really?
That went to zero, right?
Oh, wow.
And so the treasury started at zero, where everyone else had the chance to compound. And so I always I think people, they hear these two things, right? They hear the extremes of the clickbait, the doom porn of, the things we're about to crash. And I think you have to see two kind of things, right? I think we are at the end of a cycle, like a major world cycle in terms of money and monetary debasement, but we're kind of at the last stage of this kind of an upward cycle, right? Like they're printing money to oblivion right now, like the M2 in China and everywhere else. Every central bank across the world is cutting.
Right.
Everyone is in trouble. So there's a mini cycle that, you should probably be invested in and take advantage of. But don't forget that we're driving faster towards the edge of a cliff. Like, give me your perspective on that longer term, where we are, the $35 trillion elephant in the room.
Yeah. Well, it's amazing. It's amazing to me that nobody in Washington is talking about it. I think they're just pretending it'll go away, or they won't react until they have to react as a result of a crisis. I mean, in my mind and in my investment, views, I model it in my head, kind of using this fourth turning model, which we're in one, right? And the issue is money. And I think you know what I'm talking about. Maybe for listeners don't. There's a book called The Fourth Turning by Howe and Strauss. It talks about how every 80 years you have a cycle of a crisis cycle where the rules change. The last one before this was World War II and the Depression. Before that was the Civil War in '65. Before that was the Revolutionary War. in 76, started in 76. And so every 80 years, kind of society gets thrown on its ear and a new set of rules come out of the other side. And I think we're at the end of the 80-year cycle, that started post-World War II when we had fabulous growth and the United States was on top of the world. And I marked the beginning of this fourth turning as 2008, because that financial crisis really kind of kicked it off, right? I mean, it was huge. It was worldwide. It was significant. And really the financial system nearly failed. And these cycles, they vary in length, and the model's not perfect, but if you look at them, it tends to suggest they last kind of 20 to 25 years. Some are shorter. The Civil War was shorter, although you could argue it started earlier than when the guns started firing. But the point is that if that's the case, that would imply that, we will resolve this cycle sometime late this decade, early in the 2030s. And that kind of feels right to me. I think that, they're going to continue to print money. I think that inflation is going to come back. And I think that as time goes by, more and more people are going to become aware of this as an issue. I mean, we're seeing, people like Elon is aware of it. RFK Jr. is aware of it. He tried to make Trump aware of it. I think he kind of is. I don't know that he knows what to do about it. But the point is that I think that, it's going to become clear that the money is broken, as the title of Lynn's book. And as that becomes more and more clear, I think that, we'll start to look for solutions. And it could be a monetary reset. That's what Roosevelt did in the 30s. It could be, a slow transition, a gradual transition, hopefully a painless transition to a more sound money system. I'm not sure, it's going to take real skill and real political leadership to pull that off, but it's possible. I think the alternative to that is we're just going to keep driving the car as fast as we can until something blows up. And, they have the big print where, the Fed balance sheet, if you noticed, is kind of, pre-08, it was at 900 billion. 08 kicked it off, and Bernanke grew it up almost to 4 trillion. Then they brought it back down a little bit, and then COVID hit and they took it up to 9 trillion, brought it back down to 7. I mean, the next one in my view takes us to 25. And the good news is we might all end up being millionaires. The bad news is gasoline might be $20 a gallon and a hamburger is going to cost $100. I mean that's kind of the way we're going, and that's why I say it's really just all math. I mean, it's, in a debt-based system where you need debt for growth and you need to service that debt, and the underlying productivity and GDP is not growing at a rate that's fast enough to support the debt. The only way to fill the blank, or, to make the numbers square, is to print more money. And, which you can do, and we've done, and it's not uncommon. But by definition, you're not printing goods and services. So you print more money, you have the same goods and services. We're all competing for them. The cost of those goods and services is going up. And so that's the underlying problem. And really, there's nobody in Washington talking about how to address it or solve it, which is very unfortunate. But, like I say, I'm hopeful that, things like, my book, other books, knowledge, I mean, even the mainstream is starting to say, talk about this a little bit more. I mean, you're seeing it creep into a lot of different discussions. And I think, in 5 or 10 years, it's going to be common knowledge that this monetary system is broken. And, right, just completely broken, FUBAR.
I mean,
So, right.
the revisions kill me. I mean, I just can't even.
Yeah, right. Oh, yeah. No, it's,
Look,
don't get me started on government statistics. I mean, I like Saylor's view of it. It's just like, why do you pay attention to any of that stuff? It's all just nonsense. He's right. It's all just complete nonsense. I mean, arguably, we've been in a depression since 08. I mean, a lot of people have really suffered and continue to suffer in this economy. I mean, and yet the 1% continues to get wealthier because they print money to support the asset values that they have. So it's not good. I mean, it's really not good, and it's not hard to see. And I think you would agree, probably, I'm sure, in your interactions with people on day to day. At least the world is becoming aware of it, much more aware of it. I mean, and everyone reacts in different ways, but I mean, you've got this mob boss who runs the Teamsters, or the longshoremen, and he's like, hey, you guys all got yours, I'm getting mine.
Oh yeah, it's crazy. Yeah, don't watch what they say on TV. Yeah, you look at that guy's house or from the Google.
Yeah, right. No, exactly. But I mean, here's an interesting point. He was able to negotiate an 8% raise over, I think, the course of 6-7 years. I mean, 8% is a long way away from the 2% target that the Fed holds.
Yeah.
So for the Fed to argue that, look, they have to run a negative real rate environment for a long period of time in order to grow GDP to a point at which it can support the debt. They absolutely have to. And so, this is a point that's well made by Luke Gromen. And so, at the end of the day, they're going to, because they have to, they will. And what that means is, as Gromen says, is the sucker at the card table is the bond market.
It's a bond. Yeah.
And the bonds, who would want to own a long-term government bond in a government that is bordering on, if not completely bankrupt? Right?
Yeah.
I mean,
it's a nightmare.
it makes no sense. And so eventually the bond market will go the wrong way. In fact, I thought it was interesting. The Fed it just did its first 50 basis point cut, and yet the yields on the long bonds all went up. Right? I mean, it's like, that's interesting.
It's interesting.
People are losing faith, right? And so, that's to me. I mean, the things I've said this in other pods. The thing to keep your eye on is keep your eye on the long-term interest rates, keep your eye on the price of gold, keep your eye on the price of Bitcoin, eye on the price of silver. Keep your eye on the dollar as compared to other fiat currencies. I mean, all of those things will tell you that the world is, how the world is waking up to the problem. I mean, I think Nick Timieros tweeted from the Wall Street Journal, he did a victory lap of how the Fed has landed the plane with a 2% inflation and they're cutting rates and everything's good. And I replied, I said, okay, Nick, if that's the case, then why is gold at record high prices?
Right.
I mean, gold is hitting all-time records in the 2,600 area. I mean, not that many years ago, gold was 1360. I remember it well. So, gold's price has doubled here, in the last 5, 6 years, 7 years maybe now, and yet, they claim that we've got inflation back under control, and the gold market's calling bullshit on that. And I think soon the Bitcoin market is going to call bullshit too. And then we'll see what happens. I mean, we'll see what the response is to that.
Yeah, I love this. Like your this thesis here. Let me actually share this little thing from the screen. I did this analysis because I actually heard your Stefan Levere podcast.
Sure.
I'm going to share my window here, and here. So basically, I pulled all this data.
Wow, looks interesting.
And I pulled the daily prices from gold, the S&P 500, and Bitcoin back to May of 2016.
Nice.
Basically, you made this comment. I was like, let me see what the data actually says.
Yeah, I'd love to see this. Yeah.
Of when it kind of Bitcoin sniffs it out. So basically what it shows is that the peak price that these things typically hit, when gold hits its peak price, Bitcoin typically hits its peak price 68 days later. But we all know the outperformance is significant.
Oh yeah, kills it. Yeah.
And then the lag between the Bitcoin and the S&P 500 is about 51 days. So gold moves first, Bitcoin moves second, and then the S&P 500 moves after.
That's great analysis. That's very interesting. I hadn't seen it put quantitatively like that. Nice work.
So this is kind of cool. That this is the every rolling 1 year period, right? This is what you're talking about. The outperformance is 221% over the
right.
And so it's going to take off faster. But it's interesting that the signal is actually in the gold itself.
And that's not because gold is better. It's just gold is different, and gold is more widely held, and everyone in the world knows and understands what it is.
Right.
So gold is very good at sniffing out monetary debasement. It's been doing it for hundreds and hundreds of years, right?
Right.
And so, look, I mean, what we see central banks buying record amounts of gold. We see, more and more countries interacting with each other, trading in their own currencies, and then net settling in gold, and not net settling in the dollar. I mean, and the U.S., a lot of this is self-inflicted wounds. I mean, the U.S., deciding to grab say whatever you want about Russia, good, bad, or otherwise, grabbing $600 billion worth of their bonds, while it might have felt good at the time when they did it, it was really a stupid move because it basically said to the entire world, hey, do something the U.S. doesn't like, they're going to steal your money. And so people started, all the Arab states, I'm sure, took note of that. The Europeans, a lot of people took note of that, and they're trading, between themselves without using a dollar. I mean, the Russians are accepting the rupee from India for oil and gas, and the Chinese are, purchasing oil and gas with the yuan. And, if it turns out the Middle Eastern states end up with too many yuan, they can't buy enough things from China, they'll just net settle in gold and just kind of skip the dollar. And so, these trends are there, and I think are likely just to accelerate. And that's the thing. The thing about good investing is you've got to be able to see around the corner, and you've got to project these trends out multiple years. And I mean, the nice thing about Bitcoin is we've got 15 years of this asset absolutely crushing every other fiat asset.
Yeah.
And so, when somebody says to me it's going to fall or it's not going to work, I'm saying, okay, why? Based on what's going to cause this to change? I mean, explain it to me. I mean, is the protocol going to fail? Okay, well, that would definitely be a problem. I mean, but is supercomputing going to come along and cause all the private keys to be hacked? Well, that would be a problem. But I mean, absent something like that, I just don't see how this doesn't continue to become, to remain the best performing financial asset in the history of the world. And so, to me, it's so obvious that you know um, people need to own some of this. Now, if you can't stand the volatility, that's great. The way, any good investment manager will tell you, the way you deal with something that's too volatile, it has huge upside bias, or asymmetry, but is volatile, is you manage your position size.
Mhm.
You don't put 100% of your money in Bitcoin. I mean, I would never counsel that for anyone. I mean, I have a lot in it, but it's not 100%. And, but you don't need 100%. I mean, if it's going to do a 100 bagger, or even if it's only going to do a 10 bagger, and you've got 10%, in Bitcoin, I mean, that's going to have a very meaningful impact on, your financial condition in 5 or 10 years. And I think a 10 bagger is assured within, I mean, I subscribe, and I know some Bitcoiners will shit at me for this, but I actually think the power law is pretty descriptive. I mean, if you look backwards, it's actually, had a nice R squared correlation with reality, and it could break. I mean, all models are born to break, and it could break to the upside if we have hyper Bitcoinization. But absent that, at a conservative level, I very strongly believe the power law will predict the future price of Bitcoin. And if you look at that, if you look at Fred's work or Giovanni's work, you'll see that we're going to be at $1 million in 10 years. I mean,
Yeah.
we're going to get there. So
What's her 2025 case? And everyone's just,
yeah, this is kind of guessing, but just
guessing.
kind of watching what's going on right now. Silver's right on the cusp of break. So gold's broken out clearly. I mean, it's like running wild, right? I mean, and all the gold shorts are in a lot of trouble. Silver is right on the cusp. Go look at the silver charts. Look at my thread on Twitter. I've got some good charts there. It's like right on the cusp. Silver goes through 32.50. It's going to 40.
On a 40, yeah.
And yeah, and so that's important. And Bitcoin is making a giant bull flag, and kind of trapped in this range that it's in. And based on your numbers, you just said, kind of 60-day lag. Well, I think gold started hitting these highs, probably a little less than 60 days ago. So I mean, it would not surprise me to see, Bitcoin take off. And I think I said this in another podcast. I tend to believe that I think Bitcoin might be 100,000 at the end of this year. I think there's a decent chance that that something is going to break. The Fed's going to have to be more accommodative than everybody thought, and seeing that, gold is going to continue to run, silver will run harder, and Bitcoin will break out of that flag. And when it does, and we all know how it trades. I mean, when it gets on a bull run, it doesn't stop. So it'll get overvalued. By the way, I mean, there'll be a point maybe when it's at 200,000 sometime next year where I'm not sure I would be adding to my stack. I'm not going to sell any, but I'm not sure I would add. But today at 60, it appears to be kind of in the low end of the fair valued range, and so I'm very comfortable buying it here, which I am. So it's hard to say though, Dante. I mean, they're kind of two things. I mean, there's the what's it going to do, just assuming they hold the system together. And I think in that case, gold goes to 3,000 and Bitcoin goes to 100,000 or so. I think there's always kind of the wild card though, which is that, if Lynn has a great chart on this, you know, they've got to create money or else the system breaks. But they try to avoid creating money knowing that it's inflationary. And so usually they do it too long and then something breaks, like the repo crisis in 2019 or
Oh
COVID
yeah.
in 2020, or, the housing in 2008. And we don't know exactly when, but it strikes me that there's a decent chance that in the next 6 to 18 months, something's going to break. Something major is going to break. Some bank's going to fail. Some basis trade's going to blow up. Some CRE company is going to really take down some big organization. Whatever it might be, it's going to be, and it's going to be deemed as, oh, who could have seen this coming? This is a crisis. We got to deal with it. And they're going to go back to ZERP. They're going to go back to QE. Who knows? Maybe the bond market's going to fall hard, and they're going to go, they're going to go to yield curve control and say, we're not going to let the 10-year or the, I mean, they kind of did verbal yield curve control last fall, when the 10-year went over 5%, and they were still hiking rates. And within the space of 2 weeks, about 15 Fed governors came out and said, "Oh, no, 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 the cycle's over. The market's doing its job for us," and
Yeah.
because they didn't like it over 5%, right? And it immediately came back down into the high threes. So, something, in my opinion, something could break. And if and when something breaks, that's when we get the big print.
Yep.
That's when they just turn on the fire hoses again. And on the next big print, Bitcoin's 250 and gold's 5,000. I mean, it's kind of my guess.
Oh
But
yeah.
but I can't tell you that that's tomorrow or that's 18 months from now. I don't think it's years from now. I think it's because I think mathematically the system's going to start to break down if there isn't more printing. So
Oh yeah. I mean, I remember this. I mean, it was literally only a year and a half ago, but I remember the picture, the post outside of, I don't know if it was First Boston Bank or one
oh
of
yeah, yeah, Silicon Valley. There was a
the.
perfect example, right? Yeah.
Yeah.
Yeah, the
There's,
two Porsches and all my elderly neighbors standing in line trying to get their money out. Yeah, that's still the background picture on my profile on Twitter. I kind of keep that to remind me. It wasn't the Bailey Savings and Loan, right? Yeah, and to be honest with you, I thought here we go, here comes the big print. But I got to give the other side credit. I mean, they're pretty crafty, and I mean, Yellen talked about maybe bailing out all the banks, and they immediately. By the way, they violated the law there. Dodd-Frank said that depositors should have taken a hit. They didn't make them do it. And there was a time when they were afraid of nationwide bank runs, and there's $17 trillion of deposits in the U.S. banking system. I mean, if the Fed, and the FDIC's got 170 some odd billion dollars to bail out people up to the 250 limit, right? And so, if the FDIC had to write a $17 trillion check, they don't have it. I mean, the only people who have a $17 trillion check is the Fed because they own the money printer. So, and if that happened, there's your Fed balance sheet to 24 right there. So, I mean, look, the third Fed mandate that often gets forgotten. I mean, they've got these mandates, right? They were established in '78. There was a law passed that said they have to focus, because before this they didn't have a mandate. They said they've got to focus on full employment and
right.
price stability,
Yeah.
which they then went on to define as 2% inflation, which is I mean how that's stable, I don't know, but set that aside. The third unwritten Fed mandate is functioning financial markets.
Yeah. They're the bankers. They're the central bank for the banks.
Right. Yeah. The backstop. I mean, the reason the Fed was created, right?
Yeah.
It's a one-way ticket to protect the banks. And so, so we know, and we've seen it. Oh, we've seen this movie so many times that, we're kind of getting hip to their game. And, there'll be some other crisis. I mean, some say that maybe they're going to try and start a war and they'll use that as the excuse. I mean, I have no idea knowing what the excuse will be, but there will be a monetary problem of some sort, in the years ahead, and it will lead to another big print, and that will lead to massive debasement, just like the last one. I mean, I'm still stunned at how much the cost of living for all of us has gone up pre-COVID to today. I mean, it's kind of 40-50% across the board, and the next one will be as bad or worse. And that's really sad because the containeers can figure out how to benefit from it, but the rest of us need to buy food and gasoline, and it costs more. So
Yeah.
yeah, so that that's what we have to look forward to, sadly. But we can drain their system,
Yeah.
and the way we drain their system is we just don't play. We don't save in fiat. We don't store our money in banks. We become self-sovereign. We try and convince more and more people to be like us.
Yeah.
We cheer on the people buying gold at Costco, even though it's gold, not Bitcoin. We cheer them on because they're buying real money and holding that in lieu of fake money, or money that the other side lies about. And when it gets to the point where nobody will accept the other side's money, their power is gone. I mean, they can't start wars, they can't do anything. Their power is completely gone. So that's what we need to get to. We need to get to the point where everybody in this country understands that, and we all vote with our feet and our money, and the dollar goes to zero, and then the world will be remade by sound money people who I frankly trust a lot more to run the world than the people who are running it now.
Yeah.
You know,
Well, two final questions or thoughts that I
sure.
want your perspectives on. question number one, the number one event in the world that no one's talking about. It's not
Yeah.
Jerome Powell in the November Fed meeting or whatever's coming up, right? It's Vladimir Putin on the 24th, I think, right? The BRICS Summit, right?
Yeah.
That's coming up, and I think
Yeah.
it's just like under the rug that
Absolutely. Yeah.
everyone else in the world is meeting about what's going on.
Oh yeah. Yeah. No, and the talk is they're going to introduce something called the unit, and the unit is going to have a 40% gold backing. And there's been a lot of talk about a BRICS currency for a long time. And as a practical matter, I'm not. Will they do it or won't they? I don't know, and I don't really care. Well, I kind of do care, but I don't think it's so important whether they do it or not. I think what's really important is kind of what's happening under the surface, which is more and more countries, more and more of the BRICS participants are coming to realize that by storing wealth in dollars, they're being robbed,
Mhm.
and therefore they are going to look for alternatives. And the natural alternatives, there are really only two monetary alternatives, or three outside of the fiat world, and they are Bitcoin, gold, and silver. And so it's just a matter of time until I think more and more people migrate into the sound money camp, just as a matter of self-defense. I mean, people will always do what's in their own best interest and to protect themselves, and they should. They definitely should. And so you can see it coming, but it's like all things. I mean, it takes time, and there are people who are completely blind to this. And certainly I know in my experience, the people who've done extremely well in fiat terms in fiat land, they don't think anything's wrong. I mean, they're
Yeah,
winning. I
yeah,
mean, they're like, monetary problem? We don't have a monetary problem. I'm like, no, of course you don't.
yeah,
Because you figured out a loophole how to get paid, a gazillion dollars by shuffling paper around in the financial markets. But the average American, the average citizen of the world has a real monetary problem because they're making less money, and they're or the same amount of money, and everything they're buying costs a lot more. So,
yeah.
you know,
I'm just hearing about your book over the last couple of weeks, man. Tell us one thing that you're just like excited about
well,
coming out.
I
How
don't know.
can we?
I'm excited to get it done. It's a lot of work, and I'm terrified that it's not going to be any good. But we'll see. I'll let everyone else decide that. I'm kind of it's a little bit of a hero's journey. I'm kind of telling my own story, um, and the thesis, Dante, is just I'm trying to explain. I'm trying to write it in a voice and in a manner that would allow somebody who doesn't know what the Federal Reserve is, and who is maybe screaming, they're blue and they're screaming about the red, or the red and they're screaming about the blue, and I see all that stuff, and I'm like, you guys are all focusing on the wrong issue.
Yeah,
I mean, I'm not, you're focusing on the underlying problem here. If you want to solve the underlying problem, you've got to get the money right. And so I'm going to try to, in a way that explains it from first principles, in a way that any human being could understand, any with a basic education could understand, explain how we got to where we are, why it's wrong, and then what the solution is, and how to protect themselves, in light of what's likely to unfold over the next 10 or 15 years. So I'm trying to kind of make it a sound money book for every man. This
yeah,
kind of, and this has been done before, and there are other books out there that are much more brilliant than mine. I mean, Lynn's book, Jeff's book, Safe's book, they're all much better than this is going to be. This is more. I'm trying to put it in colloquial terms and tell my personal story so that people can kind of relate to it and how I came to these conclusions, and hopefully that'll help people who are not even aware of this issue to think it through and go, oh yeah, he's got a point. Maybe I should be thinking in these ways. So that's the goal. Whether I can achieve that or not, to be determined. We will see.
oh man, I think you will. And you're like, I appreciate you a whole lot, man. I
Oh,
really,
thank you. Yeah, you're very kind.
there's people out there, and I laud these people for all their achievements. Like, thank God for Elon Musk and Starlink and
Yeah.
everything else going
Oh
on.
yeah.
But the people that I want to aspire to are like guys who are still grinding in the gym in their 70s,
Yeah.
guys who are still married, whose kids still love them, who've
Yeah.
been partners and friends in business for a long time,
Yeah.
who've lived in a community for a long time. If they're not in their neighborhood, people know that they're not there. And I think you exemplify a lot of
Oh,
those.
you're very kind. I mean, yeah, certainly. I mean, you think about this country. There's so many great people in this country, and it is a great country. It's founded on great principles, and sadly, it's drifted away from those in a lot of different ways. And I think the monetary component of it has been pretty substantial. And I think it's an area. The reason I'm writing the book was that I just kept saying, I kept pounding my head against the wall and seeing everybody upset about all the dysfunction and how broken it all is. And I was like, imagine you're like standing, there's a fire like burning down the house, and you know where the fire extinguisher is, and you're like, grab the goddamn fire extinguisher. You know what I mean? Everyone's yelling at, well, this fire is this, and we should do that. And we should no. Grab the friggin' fire extinguisher. It's going to really solve the problem.
Yeah.
and sound money is the fire extinguisher. The thing's burning down. We return to sound money. We've got great technology. We got great people. We've got a country with a lot of things right about it. Obviously, some history that's bad, but we can overlook, and we've grown through some of that. And let's go back to first principles of what made America great, and we can get there, but not not if we continue to let the fiat lords run the place, because they're looting it. Right?
Yeah.
And we all pay for it, and sadly, a lot of people think that's normal. I lead off the book with this chart showing inflation from 1800 to present, and it's really fabulous because it's this line that just kind of trickles along. You get a little bump in 1812, a little bump at the Civil War, a little bump at World War II, and then 71 happens. Just go straight. It's like a rocket taking off. And when we went off the gold standard and broke the money, it's the first instance of breaking the money. It set in motion a bunch of really bad stuff. And of course, the Keynesians have all shit on and demonize gold in such a large way that even mainstream people who are intelligent think that the gold standard is a bad thing. If it's such a bad thing, how did we get to the end of World War II, the leading industrial country in the world with the highest moral standards in many respects, not perfect, but still damn good compared to every place else, Russia, China, etc., and all on the gold standard effectively? How do we get there? Do you know what I mean? And so, and then, what's changed from, 46 to present? Well, 46 to 71 was, relatively decent for the United States, but 71 to present, the biggest thing that changed is, we went off sound money. And,
Yeah.
and that's the core problem, really.
Yeah.
Yeah.
Well, Larry, thanks for hanging out.
Oh, thanks, Dante. And love it. I hope we get to hook up again one of these conferences so we can do some lifting. Everyone who's listening should know that Dante is a beast. We were doing, I can't remember what we were doing, if we were doing back squats or push presses, but Dante was basically doing about twice as much weight as I was doing.
Oh man, I just appreciate you a ton. And we're going to end this stream, and then we're going to end up just spending a couple minutes with a couple members from Columbus, just hanging out. And thanks.
Okay. Sounds great.
All right. Thanks, Larry.
With Bitcoin, you don't have to trust a third-party custodian. You can remove all counterparty risk and protect your keys yourself. If you need help mastering self-custody and cybersecurity, well, the best place to go is thebitcoinway.com. Schedule a free consultation with one of their cybersecurity specialists, and they'll help you master the skills and remove your Bitcoin from institutions like Fidelity, where they're subject to being hacked.